Good morning, and this is a very early wrap up for Friday, April 29th. So much has already transpired, and I was going to take the rest of the day off from lunch, so just wanted to get this out. First thing, we were watching yesterday was how the US dollar was topping. And if you look at the Australian dollar on the 480 minute chart, you see that we got three lower lows in price. This one here, whichever one it is, I guess it's this one here, and this one here, yet we got higher highs in momentum. And then if you were watching for a U-turn entry on the 30 minute, you can see that we got an A. I should blow this up. Watching some of my own videos, I realize that this may be a little too small for you to see. But we had this A, B, C up. So taking out that high overnight was a U-turn, and that was at 71.16. We got all the way up to 71.84. Now, another thing you could do is, upon taking out the previous day high, on the 15 minute, we got a very clean A, B, C down, which sets up our 4X trade. Now, 4X would have been around 71.90, and it looks like we're not going to get that, and it's now taken out the low of this here. But if you pay attention to the structure as you go, you'll notice that off of this high, there was an A, B, C structure put in. So taking out that would be a U-turn. That could have been a trade in and of itself, waiting for that to go. I mean, I guess it was a little bit of a shakeout here, but, still a very reasonable structure read to short that U-turn, or to at least stop out of your longs so that you're still profitable from the early entry. And also, I just wanted to point out, if we were watching this on the 240 instead of the 480, this has what I call a three pushes and FU pattern. And that's just because the three pushes were here, 1, 2, 3. And then although we made a higher low in RSI, if you had used this bar to enter long, you would have gotten stopped out here. And that's kind of where using the U-turn entry gives you extra confirmation, because that extra, this is that extra move that pushed down the part of the pattern I call the FU. But if you look on the 30-minute structure, there was no U-turn. This was all one leg up. And remember, one legs up are liquidation type moves. They just go fast and furious. There's no good structure to them. So we would have had to take out that high to really get a U-turn. And, instead we got this other leg down. So, and then here, even though we're at a much lower level, we structurally have an ABC now. So that's the big difference, right? This is just one leg up. Over here, we have two very clean legs up. So taking out that high makes it a U-turn. If we look at the euro, I want to go back to what I put up on the 5-minute NASDAQ chart yesterday, the limit buy. This is the equivalent here, the limit sell, where we had 1, 2, 3, 4, 5, 6 red days in a row, and these last few ones are pretty vicious. So any test above that is going to want to test back down to the bottom of this range. And once you get above that high, which happened here at 2:30 in the morning, 3:30 right here, you could watch the structure. And I'm not sure what I was looking at before, but there we go. A, B, C. There's your U-turn structure. And then we went higher to make an up, and then coming back down through that is a U-turn. And that's a reasonable way to enter. So this is the 5-minute chart. You can see there was virtually no heat on that either. 74 down to 29, so almost 45 bips. So think of a U-turn as a tool for entry. The other things we look at, like the Forex and stuff, that is the reason for a trade, but the U-turn itself on a lower time frame can be your trigger for entry. Let's move on to gold. That was our favorite thing yesterday, and that took out previous day high at that took out the previous day high around 7:15 p.m. around the Asia Open last night, and this gave us a non-traditional entry. It didn't do our typical ABC type pattern. Well, I guess, yeah, it basically created a hoagie up here. This is a 5-minute chart. Well, I guess the hoagie on the 5-minute would be from here. On the 15-minute, it's also a hoagie. And I'll just put our traditional box around it. This high is 98.7. This low is 97.1. The low on this big candle was 97.3. So it held in that hoagie. And you can tell that we got many, many multiples of our risk on this. Good Lord. We got many, many multiples of our risk on trading this hoagie here. This was barely $1.60 in size, so call it a $2-ish stop and a $22 move. So, 10, 11 to 1 risk reward on that hoagie. Moving along, in the morning, the S&P before the open had a Fitz pattern. And remember, a Fitz pattern requires a MACD crossover, which happened around here. And a Fitz pattern is merely a break in the trend line. And, just roughly drawing that in here. In the morning when this trend line broke, with this bar, upon breaking above that bar, I like to go for 2R. And this stopped about 2 or 3 ticks shy of 2R on that. So got out when this candle here failed. But that was just an opportunistic trade. I wasn't really looking for anything, but see $1 laying down on the ground, it's kind of hard not to pick it up. After that, natural gas. Now that was a really nice situation also, where we have our down wave. This is the daily now. We have our down wave, our up wave. We had another down, and on our, we had one day down. Our second day down, we would expect to bottom and come back up. So in that situation, you can use a U-turn to enter. And let's see. We made a low at 680.6, 680.5, and then we double bottomed 680.5. So our U-turn structure here again on the 15-minute looks something like this. The previous swing down was this A, B, C. So we got a swing up greater than the previous swing down. So then, and we got another swing down here. Let me put the GAN on it. So you can see we had a swing up greater than the previous swing down, and then we have this swing down. So taking that out is a U-turn. And that got taken out at about 699. We went up to about 717 here. So again, really good movement on this market. And then in progress right now, off of that high, we have a very clean A, B, C with a low here of 701.5. Oh, this got down to 701.2. I didn't notice that because I just had my stop a little bit lower than that. But that's an ABC off the top, and then it looks like we've got our 2 waves up now. Yeah, I wouldn't want to overstay my welcome here. Now we can find a very similar pattern on crude, and this just comes from, paying attention in the morning, opportunistic type stuff. This made a higher high, 106.90. This was the high of the day at the time, and it got rejected initially. So we have this previous high of 106.87, and it made a high about 3 cents higher. But if you just paid attention to the structure as that happened, we got a very clean A, B, C, and this made a lower low, 620 versus 623, which gave us a nice risk bar right here. This risk bar, 30 cents, so $1.20 up would be 770 to hit our 4R. And we have achieved that. 770 was down here, I believe. Yep, you already got it over there. So, again, this is just opportunistically in the morning when you see a new high being made, see if you get a good structure. And for risking this 30 cents, you got $1.20 right there. Another thing I want to just put up was Facebook. Yesterday, we talked about the cup and handle pattern that was forming, and it basically held on into the close. And I believe this was our very tight bar, which we typically don't expect it to go down below, 204.62. Now, like I've mentioned before on the RSU trade, the opening bar is somewhat meaningless. So on a day like this, what I was looking to do is buy into this morning gap down. And, given that it's Friday, if you did that with weekly options, you could have bought the 207.50 calls. 207.50 is right here for $1.12. And up here, we had over $4 intrinsic. I saw the option trade as high as 470, may have even gone higher. But that, again, is just an opportunistic trade from having the situation awareness that we had this cup and handle pattern yesterday. It didn't really break out yesterday. And then knowing that the opening bar is BS, it can do, whatever it wants. It really doesn't matter. The opening price itself is not particularly a good barometer of value. It's an anchoring point, but it's not a good indicator of value. So that was it on that Facebook one. So yeah, it's been a very active morning so far. I don't typically like Fridays, but also the end of the month can put some dynamics into play later in the day. The typical statistic is that the last hour of the last day of the month is bearish, and then it typically gets reversed almost right away after the bell, because the first day of the month is bullish. So it used to have systems that traded that, but I don't like working on Fridays anymore, so we're not doing that. But yeah, stay nimble, be careful, just because it is a Friday. Oh, I'm sorry. The one other major thing I wanted to look at was the Russell. This was something we were looking forward to, that if we were to get a test above the high, we wanted to see if we can get a 4X trade. And this is, again, where the method helps save you, and that is all the way down to even the 1 minute chart. So there's no way you would have gotten trapped in this, because looking all the way down to a 1 minute chart, we broke here, we got one leg down. We made a new high here, and we made one leg, two leg, and then this went all the way down to here before it would have given you a trigger. And, that's below this previous consolidation. So we already know that this was a test and reject, not a test and consolidate and go higher. And again, that's where following the method of not just buying the breakout of the high, not anticipating things, not trying to get cute with your entry, any and all of this here just protects you. And this is down to a 1 minute. If you looked at a 2 minute, obviously it'd be the same thing. The more granular you get is, where you could potentially get trapped on a lower time frame. And by trapped, I mean enter a trade which fails. But here on the 5 minute, we're still on the same one swing down, and we've already taken out Gosh, did we take out yesterday's low? No, we're still way off of yesterday's low, but we've taken out the significant chunk of consolidation again, so that makes the 4X a no-go. So I just want to show you that because, that was a legitimate 4X setup, but then by just waiting for the setup, even on as low as the 1 minute chart, you did not get trapped because by the time it would have triggered, you realize that it was a bad setup. So anyway, stay nimble, be careful, and we'll see you over the weekend or maybe on Monday.